simply care about staying on the right side of the trade. If this market is really where I believe it to be, which is somewhere in this neighborhood here, okay, then my only real job is to try to sell as close to the top as I possibly can, okay? But if this thing is going to continue for much longer than I am anticipating, then I would much rather stay long and strong for a while longer rather than try to say, well, that must be the top and I'm selling here and oh, I'm locked out and I'm missing all of this just because I'm trying to stroke my own ego and say I told you so, right? I don't care about being perpetually wrong. I'm happy to be long, strong and wrong so long as I keep staying on the right side of the trade. But you've got to ask yourself, do we, number one, look exactly like this setup, which I make the case we absolutely do. And number two then, okay, what do you think is going to drive this? Because I think it's going to be the market completely wrong about the liquidity story, completely wrong about how much liquidity and printing is coming. Because again, most market participants don't even understand we need rates at or near zero for quantitative easing to even become effective. And I also want to use this as an opportunity to point out that they don't typically do quantitative easing, okay, and helicopter money at the top of a euphoric blow off top and a parabola, do they? They typically wait for everything to start to break and crash, and then they step in here and stop the thing going to zero using helicopter money after they've already exhausted the other lever, which is slashing the rates to at or near zero. So I suggest to you that it's probably much more likely the print is not coming until here, rather than this is going to continue for a while longer and then they're just going to open up the helicopter door and start tipping money out into the system, right? To me, that just doesn't make sense.